Hello, everyone. It is Monday, which means it's Zen Money Monday. Hopefully everyone is beginning to make the transition into the fall season a little bit here. And today I'm super excited because our guest is Tracey Bissett. And Tracey has a really long, well-rounded history in financial education, support, the banking, loaning industry. Loaning is not a word. Loan industry. And we're going to just dive in today. I'm really interested in talking with you about your background, but also primarily the things you see in your world of coaching people and educating people officially and unofficially through your podcast and through your teaching around financial management. Because I think, as we know, I love this conversation, but also there's so many different layers to it. And your focus on the personal financial management is a really critical piece of the puzzle. So welcome to today's show.
Thank you. I'm so happy to be here, and it's fun that we're live. So
I know.
Love that. Just to give the viewers and the listeners a little bit of background about me. I'm in Canada. I'm in Toronto, Ontario. Grew up on the east coast of Canada in Nova Scotia. And I've spent about 20 years in the Canadian financial services system, either working directly or indirectly with entrepreneurs, so helping to get loans structured in the small business space. And then I worked for many, many years in risk management. So I was the person behind the scenes deciding whether or not the company should get the money. So I've seen all industries all across the country, deals of all sizes, and really am adept at analyzing companies and figuring out if everything is there that they need to have in terms of getting the funds. And it really comes down to management is the deciding factor. So as Liz mentioned too, I've got my podcast, Young Money, the advice show for young millionaires in the making. So kind of straddling the young adult and the entrepreneur space.
Awesome. I definitely want to dive more into what you have seen over the years, particularly in the funding space for business owners, because everyone's always wondering how to best leverage themselves that way, for sure. But before we get into that, from your personal side, were you always interested in the money conversation? How did you get into finance originally?
I loved money since I was a really young girl. I knew that if you had it, you could do stuff that you wanted. And it was really as basic as that. And so my dad was a banker. My mom was a stay-at-home mom for most of our lives. And we had enough money for the things that we needed, but we didn't have lots of extra. So I couldn't go to my mom every day and say, I want to go to the store and get like a slushie. So I quickly figured out if I wanted to do that, I had to figure out a way to do it. And so my friend Jennifer and I were entrepreneurs at very young ages, probably like 7, 8 years old. We were out on the street doing something, selling lemonade, selling lessons, babysitting other kids, just to get that probably 50 cents we needed to go to the store. And so I was...
The slushy fund.
Yeah, or the candies, those love hearts or licorice, whatever. And so I was hustling from a young age. So then I kind of had the bug for entrepreneurship, but when I went to university, then I thought, well, maybe I'm going to have a corporate career. And so I was almost 20 years in corporate and then kind of returned to entrepreneur space. But I've always loved money and what it can do.
Oh, for sure. For sure. And I love how clear you were around okay, I want to be part of this conversation. Let's figure out a way to do it for myself. Let's figure out a way to talk about it. Did you feel that when you were in university, was entrepreneurship an option, or would you feel like you were kind of funneled toward the corporate environment in that space?
I would say it was an option, but it was at that time, we're talking about 20 some years ago. It was probably for those who express those traits more overtly. And so it wasn't that everybody was encouraged to pursue that as an equally viable option as a corporate career. Whereas now I think that many people can do it. And if you're passionate about it, anybody can do it. You may have to nurture some skill sets that you don't naturally have, but that's just like in a corporate career. So I think at that time, people were making decisions based on what they saw about people's outgoing nature or not, and whether they thought somebody could sell. And if they didn't think all those things were really there and kind of dynamic, they pushed people towards corporate.
Mm-hmm. Yeah. I can see that, having also been going through the career choice, pathway in the same time frame. And it was just a different conversation then. And I think it's partly because the barrier to entry for entrepreneurship and small business ownership is so much lower than it used to be. And so
the other thing too is that at that time, most people had the benefit of having long-term careers in one organization. And so people weren't thinking necessarily so much about doing it for themselves because they had it really good in a corporate environment. And in the last 10 years, I mean, we've seen there's layoff after layoff. And so I think it really spurs that conversation on.
So because you're still working in the official banking industry, but you're also teaching. And so you've really been able to see, I'm assuming, a shift in dynamic and a shift in kind of clientele. And I'm curious what you've seen change over the last 20 years in terms of, on the banking side, are different types of people coming and doing the loan application? What are you seeing on that side? And then also on the education side?
Absolutely. Well, on the corporate side, I would say that certainly on the small business side and that size of deal, there's a lot more automation. They're using a lot more AI technology. It's less person-to-person analysis. And so there's a lot of data scoring. And so when you're a small business and you're starting up, when you don't have a proven track record, everybody should be aware it's based on your personal credit history. And so your personal credit score really factors into how are you going to do and fare when it comes to the loan application and whether or not you get approved. Then they're going to look at what other types of things do you have for security? Are you putting up your house? Are you putting up some other things, depending on how much money you're looking for? And so it's a little bit more automated. Certainly people will never be taken out of the equation. There's always going to be things that be kicked up to people for manual review, but more and more is automated. So I would say that's a big change.
What size of deals are we talking about? I mean, I think a lot of our listeners, that could be, could mean a lot of different things, especially if you're not sort of spending a lot of time or comfortable with the banking industry.
In Canada, I would say up to probably 250, 300,000 is probably mostly on the automated side. It's getting into a mix the higher you get from there. And certainly when you're at $1 million or higher, you're going to have a lot of human intervention into the program.
So what are the pluses and minuses to this automated interaction from a customer experience standpoint?
Well, you're still going to deal with someone on the front end where you share your story, share your information. And so I think for those entrepreneurs who are organized, prepared, have all of the required information, and they know what it means, I think it bodes really well because it takes any potential bias out of the system.
Okay.
Because everybody's going to be evaluated using the same rules.
Yeah, there's a certain fairness that maybe in the past wasn't felt, because if you went to one loan officer, you might do well and get what you felt you need, and another might shut you down depending on kind of a personal interaction situation.
Yeah, I'd like to think that that wasn't the case, because certainly we were governed with guidelines and rules to follow, but certainly this ensures everybody's getting the same assessment.
So if somebody is thinking, okay, because one of the things I really want to talk with you about is I'm seeing this a lot, and you and I have talked about this in, previously as well. There's this idea that I just need a couple of credit cards and I'm off and running, and that's how I'm going to fund a startup or a new business venture, versus the more traditional version of going to a bank and applying for a loan and having that be your funding stream. And sometimes we do both. Obviously, there's multiple versions of this. You can do this a bunch of different ways. I'm curious your perspective on that, credit card versus loan credit funding situation.
Oh, that's a really good question, and I do have a strong view on it. I think one of the missteps I think that entrepreneurs consistently make is they don't arrange their access to capital early on.
Yeah.
And so they think I'm small, I'm just starting up, and then they don't worry about that piece. And the best time for you to secure credit is when you do not need it. So that's really important. And so you want to arrange a variety of sources. I think if anybody's not aware, credit cards, when you use them, come at an extremely high interest rate. And so that is not how I would suggest anybody fund their business. To me, that's what you use just to pay your bills if you're going to use points, or just for that couple of weeks grace.
Get cash back or whatever it might be.
That's not the permanent funding mechanism. So even for myself, when I started my consulting practice, I went out, I got a line of credit, I got a couple of credit cards, and I didn't need them. But I wanted to start establishing credit history in the name of my business, which is really important, because one of those things that's going to be factoring into whether or not you get credit is how many years in business have they been responsibly using credit. And so until you establish it in your company name, that can't happen. So the other thing that's really important is even when you're cash flow flush is to get a loan where you have to make monthly principal and interest payments, because that puts you into a discipline of having that routine in your business. And that's a lot cheaper source of funding than relying on a credit card.
Yeah, that's a really interesting point that I think a lot of us don't think about. You know, there's a lot of stress around the credit conversation. And typically, I think as human beings, we're like, well, if I don't need it, I'm not going to take it, because that's one extra layer of complexity. Or perhaps we know ourselves well enough to know if I have the credit, I will max it out and then I will be in a place I don't want to be in, for example. But I think what you're talking about is a much more responsible approach, saying this is actually, if I want my business to thrive in the long term, and I don't mean just the next 3 to 5 years, I mean the next 15 to 20 years or beyond, you know, that establishing that now is actually going to help us in those downturns. And we can talk about market fluctuations and, you know, all of that kind of fun stuff too. But the reality is, if we don't plan for the downtimes when things are good, we often are in very tricky situations. And I think what you're saying is that, you know, we can even think about this right from the get-go. You know, if we're coming from a space of maybe we have good personal, you know, credit scores or some version where we can translate that from the personal side to immediately starting a credit conversation with a bank that we like and trust, then that actually can help us in the future, even if we don't use it right out of the gate.
Absolutely. And I would say, even to go back a step, the biggest misstep I say right out of the gate when entrepreneurs are starting their business is that they just commingle everything. So if they got their personal groceries on the same credit card as their admin expenses or some of their web host things, and you got everything all in a big mess. So when it comes to doing your statements, it's really, really hard to figure that out. And it's hard for someone to take you seriously. So when you're comes to dealing with bankers, I mean, you want to have a nice, friendly relationship. You want to have develop trust with them, but they're not your best friend. You're not pouring out your heart about everything that's ever gone wrong in your business and everything that you've screwed up. This is about putting your best foot forward, being prepared. It's okay to talk about challenges. Everybody's got cash flow challenges. And so talking about them in a constructive, positive way so that you're viewed as a knowledgeable entrepreneur who's making plans and trying to learn from what they knew yesterday.
So over the course of your career, you know, do you have a certain, what's the ratio of new business owners, let's say, or even not so new business owners who come in really well prepared with clean documentation and are able to, because I mean, I think we didn't make this clear, but just to make it clear, if you go in and apply for a loan, if you've done this on the personal side, then, you know, they want to see, you know, your payroll records. They want to see what kind of basic cash flow you have on your personal side. Well, the same thing works in your business. And so if you have, you know, a set of books, or at least can prepare a basic, you know, concept of a profit and loss, or what's coming in and what's going out and what you owe other people, because the bank wants to know that too, you know, to see where they stand in the, you know, is this a good bet or not? We need to bring all that stuff up. And if you're doing it on little receipts or chits of paper, or you show up and you go, I don't really know, I'll have to get back to you. You know, we're giving that banker, whoever we're presenting to, an initial entry or introduction into us that probably doesn't look as professional as we'd like it to.
The other thing to keep in mind too is that the way that the banks structure who's working with you on your loan and your credit, people who are just starting into financial services, they start with small amounts of loans. So you're getting someone, could have been in the bank a year, could have been in the bank 2 years. So they don't have a lot of experience as well to know that, oh, this is just kind of the way it is with small business owners. So now we've got potentially 2 people coming together. Neither of them knows exactly what they're doing. And so the most prepared that both sides can be, the better.
Mm.
Because the larger your company becomes and the larger your credit requirements are, you move on to account managers with more and more experience. And so at the beginning, you don't want anybody, and potentially due to their lack of experience, thinking things about your company that maybe aren't true because you haven't put together a polished, prepared presentation and approach to talking to them.
Mm. So you say that, and I'm guessing some people may hear that and go, I don't know what that means.
Okay.
What does a polished, prepared presentation from your perspective look like if someone's going to show up and apply for a $100,000 line of credit?
Yeah, and I'm not suggesting people need to spend a lot of time doing additional new work to go to the bank. It should be best practices that you already have in your business where you're doing your accounting regularly. You do have at least annual financial statements, better if you've got monthly, and so that you're able to provide those. So that's not information you're preparing separate and distinct for the banker. If you are asking for a line of credit for a couple $100,000, probably not at the $100,000 level, but they may want to see a cash flow forecast. So how are you going to use the money and how are you going to fluctuate the line of credit so that they understand that you know how the cash flow works in your business? When is money coming in? When is money going out? What peak amount do you think you might be borrowing? Because it's okay to borrow the whole thing, as long as you are showing that as you go through your business, then it does pay down. And so they're really trying to assess, they're not looking for you to be perfect, but they're trying to get an assessment on, do you understand the way your business works and the way the money works in your business?
Yeah, and how is this going to benefit you best? And if you can explain that, it's like anything, right? The bank then knows, all right, this is somebody that we're interested in partnering with because not only are we likely to make our interest fees, which is, obviously an incentive for the bank. I mean, the bank is getting in bed with you for a reason, so they can make some money too, but also that they're likely to not, lose that capital because your business is going to fall apart and they can't recoup it.
And just to make sure everybody's clear about it, because a lot of times I talk with entrepreneurs and personal clients, and for some reason they think that banks are not-for-profits and they're charitable organizations. They're not.
That has never been the case, ever.
I know, but they are for-profit organizations. They have shareholders that they're responsible to, and they do need to make returns. So when they're lending out money, it's not their money. It's the money the shareholders have entrusted them with. So there is rigor around it, and banks are generally going to be more conservative than if you go to a private lender. So there's always options kind of on the spectrum of where you can get the financing. If you can qualify at a regular financial institution, that says a lot about you. That's really positive because it says that you fit within those regular boxes of credit scores, collateral, viability for the business, management assessment, all of that kind of stuff. So that's also going to be your cheapest source of money.
Do you have any advice for anyone who is in a situation where maybe their credit, especially on the credit card usage side, has really maybe gone off the rails unintentionally? We call this sort of failing forward. I'm like, if I just take on more credit, then I can kind of get caught up. Do you have any advice or perspective on that from the work that you've done in your career?
I think that you want to really, first you want to get a copy of your credit history. You want to understand what's on there that's negative and bringing your score down. And then I think you want to understand the way that your credit score is calculated. So certainly in Canada, you can work with Equifax or TransUnion, get a free copy of your report. There could actually be errors on there as well that are negatively contributing to your score. So figure out what's driving the reduction in score. Sometimes it happens because you may have gone around and asked a lot of institutions to consider lending you money. So if you have a certain number of checks from a bunch of different banks in a certain time period, that brings your score down. So sometimes it's a function of time. Sometimes you're going to have to do some things differently to rehabilitate your score. So one of those things, typically in Canada with our credit score, it's better to have a higher limit on your credit card and borrow near the middle of the limit versus always being at the top of the card, because that negatively impacts your score.
And it's the same here in the States too. One way to kind of move things around and allow you to potentially get additional lending is to bring that down to, between 40 and 50% of the basics, because it shows the bank or the credit institution that you're managing it. You haven't just maxed it out and are just riding on that and looking for another $10,000, $20,000 to do the same thing with.
Yeah, and as you said, kind of failing forward, you may be taking on more and more debt. So you may need to consider a consolidation loan. And really what that means is they take all the debt that you have, they pool it together. Now you're going to start making one monthly payment that's lower than all those other payments you were needing to pay. And so for a little while, it might be painful. And then you'll be able to improve your score and apply for additional credit down the road.
Mm-hmm.
So nobody should lose hope. There's always going to be a solution out there that works depending on your situation. And you might just need to ask a different kind of person to help you.
Mm-hmm. Well, I appreciate that feedback because I think it's a murky area for a lot of people. And it ends up being an area for a lot of shame for a lot of people because it's sort of well, I know I'm supposed to maybe be managing this quote unquote better, but I don't really know what that means. Or, oh boy, I've tanked myself and now I've got to climb out of it. And there's a lot of guilt and shame around that conversation. So, I think the more, we know about it and how we can manage it, the more that pit in our stomach tends to go away because you can make a plan and say, all right, well, maybe I put myself in a position where I'm not where I want to be. Maybe I need to pay some of this down, for example, instead of continuing to, outlay and not have the resources to support it or whatever. But having a plan around all of it or being able to go in conscientiously and say, hey, I don't need credit now, but I know I'm going to need it down the road because we will hit some version of a dip in the future. And I want to make sure I have cash resources to cover that if I need it. The planning part is so essential to feeling great about it long term, I think.
Yeah, and the other thing that's really important is communication. So a lot of times when I was an account manager, I get to work and all of a sudden I'd have a couple clients who were over their limit on their line of credit. And so I would call them and I would say, well, was the plan today? Well, I would have to tell the customers, I have a lot less options today because we're already dealing with a problem. If we had talked about this 2 weeks ago when you had foreseen potentially that you might have had a cash flow crunch coming, there were more choices available to us at that time. Maybe I could have got you a temporary increase in your limit. Maybe we could have worked on something permanent. Maybe your business is doing so well that you're growing and you actually need more access to capital. Mm-hmm. And so you try to communicate with your bankers ahead of time if you are doing cash flow forecasting. So looking at a couple weeks out, a couple months out, you can let people know, hey, I'm going to be tight here. I might need a little bit of help. And bankers like that. They don't like surprises when they come to work and now they're in a position where they might have to return the checks or the debits that have gone out of that account. Mm-hmm. So the more you can let them know, more work together, as you said, as a partner, I think the better it's going to go for everybody all around. And it really shows that you respect them and that you're creating that trust because you've identified you're going to have an issue for whatever reason. And you're now trusting them to talk to them and bring them into the solution to help you.
I appreciate that. And I think I want anyone listening or watching to consider, I believe, especially in the online space and the kind of Wild West business piece of the puzzle, that many people in that space don't necessarily think of traditional banking as the first and best option for them. Maybe because they're not brick and mortar or they're working in the cloud, it feels like it's just a different animal. And the bottom line is it's not really. And there are many reasons not to use, sort of the credit card building version entirely on its own, or some of these other ancillary funding sources that might have very high interest rates, might have very, high repercussions to your own credit score if you're kind of utilizing them. So I think, the bottom line message is, look at all of your options and find a mix that feels good to you. But the thing that's a benefit from a traditional banking standpoint is you can create a relationship with a loan officer or a team that allows you to really grow long term, that I think a lot of these other versions don't, because there isn't a real, there's not a quote unquote
transactional
behind it. It's so transactional. Yeah.
The other big benefit too of working with a lender, and once you get to know them, and not to suggest there's not going to be turnover in the person that you're working with, because that's just a natural part of life, but they're also a really good source of, if you need to find a new bookkeeper, you need to find an accountant, a lawyer, maybe someone to fill in one of the funding gaps. Like in Canada, we have Business Development Bank of Canada, We have Export Development Canada, and those two organizations fill very specific needs that are not the mandate of the bank. And so they have relationships with those providers, and they can set you up with someone to help you right away. And so it's not just for the access to credit, but also to the other things that that can bring. Just like when you think about the relationships you've got with other people in your business, usually you're not just doing one thing. You may mention, you know, I'm looking for such, and somebody has a referral for you. Same thing can happen.
Yeah. And I think, you know, our last episode, I was talking with my friend Michael Roderick, who is an expert in just the relationship building. And your banker, you know, in a very traditional business standpoint, is one of the most important relationships you can have because of that networking opportunity that they often provide as well. So it's not something to be completely dismissed if you're thinking, oh, I'm doing this differently because my business isn't a traditional business. You know, there's a million different ways to do it.
Yeah, and to your point about maybe not knowing where to go or who to go to, talk to some of your fellow entrepreneurs in the area where you live. Do they have someone that they deal with that they're really happy with, that they get responsive service from, that's always there for them, tells them the truth even when it's not great news? And so get referrals before you even start shopping for a banker.
Yeah. And I think, you know, in future episodes that we'll be having some conversations around the idea of investor funding and things like that. And I think it all ties in. The reality is you get to grow your business the way you want to. And there are pros and cons to any kind of credit, loan, cash infusion option that you end up taking or making. And a lot of times, if something seems too good to be true, it probably is, first of all. Second of all, like, let's just do our research and figure out, you know, is there somebody who I can actually start a relationship with that can help guide me as I think through these options? And the banking piece shouldn't be excluded by any shake of the, what am I trying to say here?
Yeah.
And by any stretch, you don't want to get rid of it. And I talk to a lot of people who I think are very afraid of the idea of just going to the bank and trying to get a loan. Like they would rather go and say, oh, well, I'm going to look at some angel investing, or I'm going to look at, you know, some family and friend investing, without really thinking through the ramifications of that from, the people who invest that way want either some kind of return back or they want a piece of your business, to the point where you may not actually have control of your business anymore. So let's make sure you are going in eyes super wide open on all of that.
And the larger you grow, you're probably going to have some piece of funding from everybody. And the other thing not to discount, and people may not be aware, is there are a lot of things that the bank can help you with on a non-credit side. So ways to collect your money, ways to move your money. They can develop packages for you so it's more economical. Because if you just have your accounts with them and they're not sure what else is going on in the business, they may not even make you aware of all of those options. They have payroll programs as well to help take all that off your plate. So instead of now dealing with all these different companies, you may be able to get a lot of your, they call them cash management solutions. So collecting or moving money out, everything to do with that.
Yep. So I think the bottom line is just, you know your options and explore them, and don't discount anything just because you're not familiar with it.
Yeah. And as we know, things do happen in your business. So good to have relationships or just connections at different organizations, so that if down the road you want to make a switch, you've already got somebody that you've been getting comfortable with.
That's a really good point too. Let's switch a little bit and talk about your teaching. How did you get into that role, and what does it really look like right now?
So when I was in my corporate job, and I was lending money, structuring deals, all that kind of stuff, approving deals, I worked a lot with learning and development to create some courses and deliver courses for young lenders in our institution. And I found that to be really fun. And so I knew that when I went out on my own, I wanted to carry some element of that forward. And so my whole business is founded on financial education, financial consulting. And so someone I knew was able to connect me to a local college where they have a financial services program. And so I teach undergrad students and graduate students about financial services. So it's been fun so far. I teach a lot around corporate credit. So how do you manage cash flow? How do you structure loans? All of that kind of stuff. So kind of my bread and butter for the last 20 years. Been able to develop a course for them, a really fun one around consumer borrowing and lending in Canada. So the students play the role of the banker, but an individual comes in and is applying for a mortgage. What happens? How do they assess them? They come for a Visa card. what is going to happen. And so whether or not they go on to have careers in financial services, they're certainly equipping themselves with more knowledge on the personal finance front. And I teach a lot of new Canadians, international students. And so I tell them, for a lot of you, for your family circle and your friend circle, you're going to be the person who knows the most about the banking system, and you're going to be able to help them navigate it. So not only are you getting a credit in school, if you go on to financial services, this is going to help you tremendously, but you're going to be the go-to resource in your community for helping people understand how it works.
Mm-hmm. Which, you know, you and I both very much believe in the knowledge is power version of this money conversation. And it's such an important piece of your work, I think, is helping, especially people, if we can get them young, to start feeling more comfortable and confident in all of this, to just be able to say, oh, wait, that's not a scary thing. It's not something I have to be emotionally attached to. I know how to navigate it a little bit more, you know, than I did yesterday. I'm not sure we can ask for more than that.
No, and the way I view it, it's financial fitness is really akin to physical fitness. So you could be taking that first step off the couch, you're going to walk around the block, or you could be really sophisticated and be going to run a marathon. Same thing with financial fitness. You might be starting to learn about different kinds of bank accounts or budgeting, or you could be a lot more sophisticated and are trying to do some special investing. So everybody's on the journey. Everyone's in a different place. No one's in a bad place. And as long as you take one step forward, ask another question, improve your learning, you're moving on the spectrum to increase your power and your knowledge and to do things for yourself.
That's perfect. So when did you start your own business? When did you create the consulting work that you're doing and kick that off?
In 2016.
Okay. So we're
a couple years ago. Yeah.
3 years in. What do you feel, what has been the most difficult part or most surprising part in that process for you, coming from a corporate background and moving into this, I'm doing this by myself stage?
Yeah, I would say at the beginning, and even now I still try to do too much on my own. So under appreciation for the support required and the team required. And so I know I used to know how to do a few things really well, and I had support for the other things. And now there's a lot of things I have to do that I don't know how to do very well. And so at the beginning, you kind of start doing everything on your own because you're trying to conserve your finances. And now as I continue to take on bigger and bigger goals, I need to supplement the team with others to make sure that I can accomplish the goals, because there's only one of me and I only have so much time, and everything is not the best use of my time. So typically technology type things, I'm usually deferring to somebody else with my guidance, but I had to really, it was hard for me to take that step and say, you know, I've got to stop being involved with all of this.
Mm-hmm. How do you work with your people? Is everybody local to you, or do you have a sort of roving band of warriors like many of us have?
Yeah, the primary person that I work with is virtual. We are in the same city, but I don't think we've actually ever met. And so we're doing it virtually, and I'm in the process of hiring, trying to be one assistant, but it's likely going to end up being two because I need some personal things done as well as business things. So some will be physically at my office, which is in my home, and some will be just more virtual work. So continuing to expand the team.
How has it been moving into more of a virtual space? Because you work with people virtually most of the time, correct?
Yeah, quite a bit. So my teaching is in person. A lot of the work that I do with entrepreneurs is via the computer, using similar to Zoom, something like that, or just on the phone. And if I'm with numbers, it works really well. Oftentimes we're looking at the numbers on an Excel spreadsheet or something like that. And so being able to see them together in the same moment is often a little bit easier than two heads trying to look at one computer screen.
Mm-hmm. Yeah, for sure. And you can pass the actual stuff back and forth, or the lead back and forth and things like that. Yeah, I think technology has certainly assisted those of us who want to embrace it from a conversational standpoint. And that includes in financial management, although, you know, we think of it more on the creative side, but I think it's very valuable in any kind of information exchange.
Yeah, and I would say that it often gives entrepreneurs comfort that they're in their own environment. Because a lot of times when we're talking about the numbers, a lot of stuff comes up that's not really about that exact number. So there's feelings, whether it's apprehension, whether it's concern, whether it's shame, as you talked about before. And so a lot of stuff comes up, and I think it just helps create more comfort, an environment that they know when they're talking about those things, and it's a little bit more comfortable and peaceful.
That's a really good point, because I don't know if anyone has ever had to walk into a space and then be very vulnerable around your numbers or otherwise. It's kind of like going to, I don't know, the emergency room or something, right? And you're in a very vulnerable space yourself personally in a very public place, and that can be that can shut you down. And I do agree that being able to be, so if you're ever talking to someone yourself around, or thinking about how can I be most comfortable, especially if I'm kind of a little jittery around the financial conversation, how can you physically put yourself in a place where you're going to feel more confident and more comfortable to be able to open up and have a positive conversation?
I also find that because they've got everything that they work with every day near them, that brings comfort as well. And so sometimes we have people who are a little bit apprehensive about using the computer, but usually after the first meeting and everything goes smooth, everybody's happy about it. Because now people aren't commuting. We're not spending all this time just distracted from the business, whatever they may be doing. And so it works out really well.
Yeah, that's a really good point. What have you liked best about working for yourself primarily now?
It's so fun. There's so many things you can do. Basically, if you can dream it up, you can make it happen. And so have to be very cognizant of not taking on too much stuff, but focusing on what's really important and where I want the business to go in the long term. So I find that in the entrepreneurial world, most of the people I deal with are extremely positive, and so it's really energizing. So I really like that.
Do you put yourself, what do you do from a, building your own business standpoint? Do you put yourself in rooms? What have you been finding to be the most meaningful to build your own business?
Depends what I'm doing. When I was building listenership for the podcast, certainly out a lot in rooms, reaching out to people on different social media platforms. This fall, I'll be launching a course for entrepreneurs. So I've got a lot of speaking lined up, and I'll be out in a lot of rooms. So it really depends what I'm doing. I've been fortunate. I have a really great network of people that I work with. I'm generally making introductions regularly to different people I think that can work well together. And so in turn, people are reciprocating to me. So that's fantastic.
That's awesome. Now, you mentioned your fall course. I think we wanted to just make sure people knew what that was, because it's kind of a fun new opportunity that you're putting out there in the space.
Absolutely. So coming up in a couple of weeks, I've got a great master class. So if anybody's listening and they'd like to learn more about this, certainly the link will be in the notes. And it's called Can I Afford It? How to know if you can or can't afford something in your business in 5 minutes or less every time. The 5 steps to cash flow clarity. And so if you want to get some more information, you can go to bissettfinancialfitness.com/afford to know if you can afford it.
Perfect. Well, and I think that's really what it comes down to. Most of the people that I talk to, right, the biggest hiccups or pain points are around, I have this thing I want to do, and I don't know if it's going to hamstring me to go ahead with it. So that sounds like a really good opportunity. Thank you for sharing that. We'll make sure that the links are in the show notes. All right. So I leave everyone with this question, or I ask everyone this question before we leave, which is, I'm curious from your perspective, having loved money and worked with money for so long in your career, what does Zen money mean for you?
So for me, it means thinking of money as a tool, knowing how to make it, get it, use it, such into a place where it doesn't control me and I'm controlling how it interacts with me. And so to me, that's what Zen money means.
Perfect. Thank you so much for sharing that. I love all the answers every single week. It's a good one. Thank you so much for joining us. We'll have to have you back on again. I'm sure there'll be lots of questions about everything that we talked about. We had a wide-ranging conversation, but I really appreciate your insight, particularly around the funding conversation and really teasing back the curtains on some of those things that many of us just don't understand or feel comfortable kind of figuring out how they work. So that was really valuable. I appreciate you bringing that to the table for us today.
Well, thank you so much for having me. It's been fantastic.
Awesome. Hope everyone has a fantastic week and that this was a really great eye-opening conversation for you. We'll talk to you soon.